All right, let's talk taxes. For most couples, filing jointly just makes sense, right? It seems easier, and hey, it usually saves you a bit of money. But here's the thing. There's a pretty serious financial risk hiding in plain sight on that joint return. A risk that can stick with you for a long, long time, even if the marriage doesn't.
I mean, really think about that. You sign that form together as a team. But fast forward a few years. Maybe you've gone your separate ways, and suddenly you're on the hook for a huge tax bill, a bill you had absolutely no clue about. It's a shocking situation, and it's all because of one very important legal idea.
You see, when you file a joint return, you're not just doing paperwork. You're actually making a binding financial pact. A pact between you, your spouse, and the government. And this pact has one very specific and very serious rule you need to know about. At the heart of it all is this legal term, joint and several liability. Now, it sounds kind of fancy, but what it means is actually terrifyingly simple. It means the government can chase down either one of you for 100% of the tax debt. It doesn't matter who earned the money or who made the mistake. And this is where things get really dangerous. Most of us, we hear joint and we automatically think 50-50. We'll just split it down the middle. But nope, that's not how the law sees it. The law says you are both 100% responsible for the entire bill. So if your spouse can't pay or maybe just won't pay, guess what? The government can come to you for every single penny. And here's the kicker. That financial link you created, it doesn't just disappear if the marriage ends. And that's where this can become a real long-term nightmare. The central problem is that a divorce decree doesn't cancel your tax liability. As the source material says, both ex-spouses remain on the hook. And you can just imagine the kind of financial pain and arguments that can cause years after you thought you'd moved on. Okay, I know. After hearing all of that, you're probably thinking, well, that's just not fair. Especially if you honestly had no clue what your ex was doing. And you know what? The people who write the tax laws kind of agreed. So they built in a potential escape route. So is there a way to get out of this financial trap? For some people, thankfully, the answer is yes. The law actually provides a specific way out for those who are caught in this exact situation. It's called innocent spouse relief. It's basically a set of rules designed to protect you from your spouse's or your ex-spouse's tax mess. If you can show that you really didn't know about the mistakes on the return and that it would be totally unfair to make you pay for them, you might be let off the hook. It's a critical escape hatch, but it's not always easy to open. Okay, so we've walked through the risk, the big complication with divorce, and the possible way out. Let's just boil it all down to the most important things you need to remember from all this. So let's recap. First, signing that joint return creates that powerful legal bond, joint and several liability. Second, that means you're each fully on the hook for the entire tax bill. Third, that financial responsibility is so strong, even a divorce can't automatically break it. But, and this is a big but, it's not a hopeless situation. If you are genuinely in the dark, innocent spouse relief is out there as a potential path back to financial safety. At the end of the day, filing your taxes jointly is a major decision with really long-lasting effects. So it all comes down to this one last question. Before you put your signature on that next joint return, have you really stopped to think about the fine print and the lifelong financial pact you might be making? Thanks for joining us for this explainer.